Is the stock market risky? That's the topic here that I want to cover in this video and show you how risk actually works, because this is a very common misconception, which you can see here on the screen, where beginners and people that are just getting started just have a misunderstanding of how it actually works. And the tricky part is these people aren't stupid. They're not being irrational, because they are right. Mathematically speaking, yes, they're correct in their understanding. However, sometimes in the world of trading and investing, you need to do this. You got to step out of the textbooks, out of the spreadsheets, and then look at it in a more practical, realistic point of view. And that's what I want to do here. So let's just kind of set up the context here. Both of these people are observing how much money I have, invested into a stock, right? How much money I've put into a stock. In this situation, it was $50,000. In that situation, it was $240,000. Now, a side note, I don't actually have that amount in my account. I'm doing something that's called margin and leverage. I'll put a link down below this video to another video where I talk about more of that, trader tool. But like I said, just understand that I'm not actually putting in 50,000 or 240, because I don't want you to get the impression like, wow, I guess you got to have a bunch of money to get involved in the stock market. That's not true at all. So don't let those numbers scare you or cause you to run away, because again, I don't even have those numbers. I'm just doing something and using a tool that's known as margin and leverage. So you can watch that video if you want. But they're looking at these amounts and saying, wow, you put that much into a trade. So TipTop says, what the F? So you put in $50,000, doesn't seem worth the risk compared to, in order to how much I actually made on the trade. Here, wow, put in $240,000. So you're risking that for a $140 profit, no comment, in so much shock. Now, on the surface, they're right, especially Tony, right? That looks really bad. Wow, you put $240,000 into a stock, but you only got $140,000 profit. But here's where things start to, we got to move off the spreadsheet and into the real world. Because yes, technically speaking, I had that amount into the stock. So you could say, well, because you put that much into the stock, therefore that is how much is at risk, which I understand that, but let's go through what that would have to, be based on. So right here, let's just say this is a trader, and they go and they're going to buy a stock. And then this is, and their strategy or their belief system is of one of the following. Their strategy is, you know what? I'm just going to H&H. What does that mean? Hold and hope. I'm just going to hold and hope and just hope that stock goes up and up. But if it doesn't, and I'm going to hold it all the way down to zero. If that was the approach, if that was the mindset, well then yeah, you would be risking the total amount that you put in for whatever gain you actually get. So if that was my strategy, meaning, you know what, I'm willing to let this thing go, let the stock go all the way to zero, then yeah, that looks really bad, because I would have literally been risking $240,000 for a $140 profit. So that's one thing is, okay, that's assuming that the person is using a hold and hope strategy. The other would be you're operating under the belief system that a stock could go from, let's just say, $10 down to being worthless at $0 in, I don't know, let's call it 2 seconds. And that's just not going to happen. I suppose anything is possible, but odds are like really, 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 really in your favor. Like, did I mention how much the odds are in your favor that a stock's not going to go from $10 to $0 in 2 seconds? No, maybe over 2 years, 2 months, probably not even 2 months. But yeah, sure, a stock can slowly drift down to being completely worthless and zero. But to think that it's going to go from $10 down to $0 in 2 seconds, that would just be a faulty premise. So right here, if you're not using hold and hope and you're not assuming that premise, well then this amount is not actually the amount that's at risk, because you can get out whenever you want. You can sell your shares whenever you want. You don't have to let the thing go down to zero. You could let the thing in this situation, and I don't know exactly because this is an older comment. I'm not sure what my trade plan was at that point in time, but I could have said, you know what? I'm at a $70 loss right now. I want to get out. And I could have just sold for a $70 loss. So that changes things up, right? So if in other words, let me rearrange this a bit, because I'm going to, just clear all that out, because that's not the premise that is being used. But if I were to say, yeah, well, I'm actually risking $70 for a $140 profit. How do you feel about that now? Which is what's actually going on, because again, you don't have to wait for a stock to go all the way to zero. You're not at risk that the stock could go from whatever price you bought to zero in 2 seconds, right? That's not, sure, that's a theoretical risk. On a spreadsheet, you can make that happen. But again, we got to step off the spreadsheets into the real world, the actual world of trading, and that's not going to happen. A stock is not going to go, or whatever you're trading, right? A crypto, a futures contract, whatever you're trading, it's not going to go 2 seconds. Oh, I bought it. Oh, wow. It's all of a sudden worthless. So that's not going to happen. And now what could happen, though, to be fair, is if you're going to say, well, I'm either going to hold this thing to go down to zero or it's going to go up. Okay, well, in that point in view, then yes, whatever you put in, you are actually at risk of losing. But from a trading perspective, from a day trading perspective, that's just not how it's going to work, because the way a day trader, a swing trader is going to look at this is, okay, not about how much money I put in per se, but okay, what is that number if I'm wrong? Like at what point am I going to say, all right, that loss means I got to get out and, sell the remaining portion of my, position. And in this situation, if I was risking 70 for 140, well, that actually seems like a pretty good trade right there. But when you look at it as just simply what you put in and assume that's the risk, well, that's just faulty for the reasons we've already discussed. So hopefully this helps. And, can the stock market be risky? Well, sure, it absolutely can be risky if you are adopting that sort of hold and hope strategy, or if you're adopting the mindset, well, geez, a stock can go from what I bought to zero in 2 seconds. I mean, if that's your mentality, you shouldn't be trading at all. You shouldn't be in the stock market at all, because that would be super, super sketchy, like a super risky environment if that was actually possible. And I want to reiterate, yes, a stock can go to zero, but it'll drift down over weeks, months, years. It's not going to go from, price X down to zero in a blink of an eye, where you have no opportunity to sell and at least recoup some of the money that you originally put in. So hopefully I explained this right. I've done this topic before, but I want to get another video thrown out there because, I keep getting these comments. And, the encouraging part here is at least this one doesn't have a bunch of likes. I've had some of these where there's a bunch of likes where it's like, okay, well, there's clearly a bunch of people that don't quite understand how this works. So once again, I understand where you may be coming from if you were thinking this way, because you're not wrong. What you put in is technically at risk if you adopt, like I said, one of those other couple mentalities. So if this helps, if you enjoy videos like this where I kind of just try to clear up some basic, premises within the world of the stock market and trading, leave a comment down below, hit that like button, and also check out the channel. I'm not going to ask you to subscribe. I think that's a little sketchy to ask somebody to subscribe after watching one video. But I will ask that if you enjoyed this video, then yeah, check out some other videos. And if you like what you see at that point, then yes, I would certainly love to have you as a subscriber to the channel. But yes, now you are informed. You are no longer a beginner when it comes to understanding risk, because you understand how risk actually works. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.